As liquidity appears to be limping back to normalcy for the NBFC sector, the rising cost of funds is impacting the balance sheets of these companies. Yashpal Gupta, the CEO of Repco Home Finance, joins us now to tell us how business is faring for them. Mr. Gupta, good morning. We did speak to other participants from your industry a couple of days ago, and they indicated that liquidity is still a bit tight and cost of funds have been on an upswing. How is the situation like for you?
See, as far as we are concerned, liquidity has not been a problem, as we told last year when I met last time on your channel, that because we are not so much dependent on the market borrowings. We have bank lines, and in fact in last about 30 days, we have got more than 1,500 crores fresh sanctions. So for liquidity is not a problem, but yes, cost of funds has been going up. In fact, in last 1 year, it has gone up by about 50 BPS. But last 1 month, we have seen that banks have now stabilized their rates or their margins above the MCLR. And going forward, we expect either cost of funds to remain constant or to go down.
Oh, really? That's good to hear, Mr. Gupta. Good morning. Thanks for joining us. Can you tell us, I mean, what we were given to understand that even bank money is a little hard to come by because many of them have bought over NBFC loans, and of course they're also getting a lot of the old NBFC business. How much is your cost of money in Q4 compared to Q3, or in Q4 compared to the first half?
Okay, so in general, your statement is right that banks are slightly reluctant to lend money to NBFCs. But considering that we have thousands of NBFCs and about dozens of housing finance companies, you have to segregate from company to company. So for us, availability was never a problem. Yes, cost of funds, as I told you, was going up in last 1 year. And as compared to Q1 to Q4, the cost of funds was higher by 50 BPS. If you compare from Q3 to Q4, it was higher by about 10 to 15 BPS. But in last 10-15 days, we have taken up with few of the banks, and they have agreed to reduce the margin above MCLR rate that they were charging earlier. So going forward in Q1 of next year, we expect interest rate to either remain constant or go down for us, cost of funds.
Okay. And you also said that you got 1,500 crores of fresh sanctions in the last 30 days. So that's a good thing. Mr. Gupta, can you tell us what is the situation as far as disbursements are concerned? How has this quarter been compared to 9 months of the fiscal? And what's the expectation like for FY20?
See, as far as disbursement is concerned, they have remained stable. While a lot of things have happened, like government has taken decision to reduce the GST on affordable housing and also several other initiatives. But on the ground, maybe because of the election that people are waiting and watching, the demand as far as we are concerned has remained more or less stable. It has not gone up, it has not gone down. So we have achieved about 10 to 12% growth rate in first 9 months. We expect that to continue. One positive thing that has happened for us is that the prepayment rates have come down in Q4 as compared to first 9 months. So the book growth probably will be more than 12%. Earlier we were expecting book growth of only about 10 to 12% because of the heavy takeovers and prepayments. But in Q4 they have gone down. So we expect book growth to be between 12 to 15%.
Okay. Get your point. So if you can give us, you said you will be able to do about 10 to 12% loan growth in the current year. Can you give us some idea of, therefore, what the margins will be? Will it be lower than the 4.4% that you did in the third quarter?
See, exact number is difficult to say, but it will be around that. It will be, we are targeting somewhere between 4.25 to 4.5. That is the margin, and spread we are targeting as above 3%. The exact number I cannot tell, but it will be around that number only.
No, I take your point. What about asset quality, Mr. Gupta? Are you seeing a steady repayment? Are defaults going up at all?
See, as far as asset quality is concerned, ours is a slightly peculiar case because all our customers, as I have told many times, are all retail customers. So the NPA definition is a watertight definition of 91 days default. So unlike corporate customers who once they become NPA, they bargain hard for restructuring or reduction rate of interest or fresh loans, our retail customers, even if they become NPA, they continue to pay. even though with some delays. So they are not able to bring back to standard status because of the past defaults. So NPA is not a big problem for us, but in terms of still, because the analyst and market does give a weightage to this number, and generally, historically, our Q4 performance is always better than Q3. So as on December, our gross NPAs were about 3.6%. We expect it to be around 3% by the end of this financial year.
Okay, what about prepayment? Because, you know, the last time you told us that although loan growth has been fine, the issue has always been with prepayments because some of the players are a bit slower in the market now. So prepayment rates have come down. What is the status check as of now?
See, in the Q4, it has come down further. In first three quarters of the current financial year, prepayment rates were about 12 to 13% of our book, and normal repayment rate was 7 to 8%. So total reduction in the book size was about 20 to 21% for the first 9 months. But in last 3 months, the prepayment rates have come down to about 9 to 10%. Of course, normal repayment rate continues around 7-8%. So overall reduction in loan book, assuming no disbursement, is 16 to 17%, which was 20 to 21% in the first 9 months of the financial year. So that has gone down. And considering that many of the big players who were very aggressive in takeovers have gone slow in last few months, we expect this trend to continue. So now our book reduction rate, that is repayment plus prepayments together, has come down from about 20% to about 16%.
Okay. Loan against property, how much of your book is for that kind of loans?
Yeah, so there as a deliberate strategy, we have gone slow on that because their delinquency ratios were higher. We had reduced it to 18.6% as on December. And in this quarter, it will be, by the end of the financial year, it will be slightly lower, maybe around 18%. Exact numbers are difficult to tell, but again, our growth focus continues to be more on housing loans and less on LAP loans. But we are not completely out of LAP because that gives us good spread. And in future, if we feel that our spreads are under pressure, we may again go back to the LAP loan. But overall target is that we will not allow it to be above 20% of our book size at any point of time. But right now in this year end, we expect it to be lower than the December.
So you're entirely retail, Mr. Gupta? Even your LAP is retail?
100%. In fact, as per our policy, we lend only to individuals. Yes, I would say that for this LAP loans, business loans, may be given in the names of promoters of private limited company. They may be promoters of proprietorship company or partners, etc. Some of them may be directors or owners of the public limited companies. But the borrowers are all individuals.
Okay.
They are not partnerships, proprietorships or limited companies.
Not builders anyways.
No, they are, some of them are builders, but they did not finance against the projects. It is that they have borrowed in their personal capacity and put the money into the projects. But those personal capacity, because they are individual lenders or borrowers, so we do not lend more than 3-4 crores to them. And it is against their personal borrowings or personal collateral, not the project financing as such.
Okay. One final question then. This NHB's new notice to raise the capital norms for housing finance companies, how will it impact the sector and your company, if at all?
Yeah, so I'll tell you, as far as sector is concerned, according to us, they are giving preference to risk over growth, which is better because I think many of the HFCs and NBFCs had become very risky in last few years. They had given left, right, center loans to large builders, which is why sector is today where it is. So one of the tools that the NHB has is to reduce the debt to equity ratio and to grow or increase the CARAR. So that is, according to me, industry will probably have some discipline. They will be slightly more risk averse than they were in the past. But as far as we are concerned, it is good for us because anyway, I told you our book size, asset size wise, composition is very granular. Second, our capital adequacy ratio is 24%. So NHB has suggested that 12% will gradually increase to 15%. So it will be good for us. And in fact, some of the players, of course, everybody knows those names. So I will not take those names, but those players, they may have capital issues. So either they will have to raise more capital or they may have to change the composition. So within the sector, it will be good for us, according to me. And
What
in
is
fact,
your-
we are suggesting to NHB that in addition to this,
What is your capital adequacy now, sir?
as on December, it was 24%.
Oh, okay, so you don't have a problem. Thank you very much, Mr. Gupta, for giving us so much color about the housing finance industry and your own company.
Okay, before we take a break, just a couple of stocks which are looking quite interesting. Clearly a bit of a cool-off happening in the financials now, both banks and NBFCs. It's perhaps just for the day money moving from banks to IT. Just a couple of stocks where you're seeing stocks actually moving to the low point of the day. Just pull out, I want to pull out some names moving to the low point of the day right now, and some of them include financials. Max Financial, for example, has moved to low point of the day. Ujjivan has moved to low point of the day. Just move these two names. Cholamandalam is at low point of the day. Just pull out that stock. And L&T Finance has also moved to the low point of the day. So these are few names where at higher level money has been taken off and should not be surprising because there's a bit of a move happening.
And I must congratulate you for those stocks that are higher. Anuj,
Yes.
you pointed out HCL Tech, DLF and Shriram Transport among the best gainers today. All of them up 3 to 4%.
Yes.
Okay, we have to take a break on that note, but we are going to carry this discussion forward about demand trends in the economy. We did housing and home loans. Now we're going to look at consumer discretionary. Titan, the big boy in that space, Mr. S. Subramaniam, CFO, joining us in a minute.